you. I need a hate to take it far, make moves. Had somebody trying to take it down, place for. You just scoring mines, press the bar.
It's a beautiful day to join the call, welcome everybody. I hope you are having a wonderful new year, and I'm waiting for my laundry. Usually, on Friday, we have the new channel, so philosophy, real estate, all that stuff we're putting in there, so make sure you guys check out the new channels. But I want to talk about why Snapchat is going to blow up in 2020, or why it's going to be such a pivotal year, and why I'm going long on it. So I'm going to switch over to the screen here in a little bit, but if you don't know, I bought a few shares of Snapchat, a hundred so far, and I'm using a strategy to build a position. So I kind of want to talk about the company itself, why I like to use it, and what I plan to do with it, and yeah, that's pretty much it. And now, before I even say that, here's my disclaimer. I own shares of it, I plan on buying more, and I don't plan on selling out, well, probably for a few years until it happens. If the company goes bust, and I really think that is still in the cards and it's a possibility, so utilizing this, I'm going to be putting a lot of money into it. However, it's not going to be all of my eggs. I would recommend get some dividend stocks as well, get a little bit of growth in there. But I want to talk about that, so let's get into it. All right, so I just wanted this for the thumbnail so you guys can see it. But here's Snapchat, man. Y'all should add me on Snapchat right there. Josh Answers. It's simple. I don't use it, but I think I'm going to start using it as much. And now that's kind of a little contradicting, because it's like, why do I invest in a company I don't really use? Because it kind of highlights the key advantage I think it has. Snapchat is for younger people, and I think they have that market on lock. I think their biggest competitor is going to be Instagram. And now this is also the basis to why I think it's going to be big. So I own Facebook shares as well, and I bought that way back in the day, and now this is why I'm coming up with this theory and why I'm interested in Snapchat, because the same thing I did back in the day with Facebook, and a lot of the same core concerns people had with Facebook is what they had with Snapchat. Now they are different companies, and Snapchat has been facing some challenges in terms of how their users have been growing. So everybody make an account now. No, but again, I think I'm going to try using it more, but there is certain features I like with it, that it is for news. When there was fires in California, and the other day someone was like, dude, there's a fire in LA, your house in LA is gonna burn down. And I was like, oh my gosh, how do I check? I'm here in San Diego. So I went and I did the new, here, let me show you. There's this map feature, and you could just go scroll across the map anywhere, and you see there's sections, and let's see, I think that's LA, Long Beach. You could click there and you could see what's going on from other people. Now this was something I think is very unique to Snapchat and nobody else has. And it's even crazy, when I go and zoom out and I get to see this is my Snapchat. Look at all the friends around the world, and it's pretty cool. Again, this is in other countries too. You don't really, man, are they in New Zealand? Are they in the ocean? That's crazy. But it's something cool like that, and I think it's just a way. Now, one thing that Snapchat even says that I like, and that I agree with, tremendously. Excuse all the, I gotta get those dirty water balls out the way. But one thing they say is it's a real friends, and that's something that they've been going on, and now Snapchat is more intimate. It was more behind the scenes, but the thing I think they have that is taking away, which could even contribute to, it's what made Facebook big, and now what could make Facebook even kind of suffer a little bit. But Facebook has so many users, but it's the younger audience. This 18 to 24-year-old demographic is huge. Not only do they have that, they have the 13 to 18-year-olds. And now there's a lot of young people, and there's some people who use Snapchat as a form of communication. Now, bring on all the Snapchat jokes. People say they have ecosystems, premium Snapchat. If you guys want to buy my premium Snapchat, you know what I'm saying? I could, stock picks and straight. No, I'm just kidding. But, there's economies in and of itself, and there's reasons why people will always use it. Some people say, oh, I don't like it, I don't support it. It's an app for cheating, and people do sketchy stuff. It's people were cheating and doing sketchy stuff before Snapchat. There's many reasons why people don't like it, and that's what I'm going to go over with you. We'll even go over some of the fundamentals. People don't like the company. A lot of analysts have sell ratings on it, but this is the key to what I'm saying, is that 2020 is going to be very pivotal for them. Given the trend, this is where they're either going to start becoming profitable, or it will be the check leading into checkmate, meaning this will set them up. And if there's no setbacks this year, 2021 will probably be their year. But if they do it at 2020, it could be great. So I'm going to go over kind of some of that stuff that I'm talking about there, and why I like it, and how I plan to build a position on it using covered calls, selling covered puts, and as well as just buying shares. So I hope you guys are ready, and hopefully, please comment below if you agree or disagree. Let's source some information here, put it down below, and let's see what you guys think. And again, this isn't in a way, please don't pump the stock. That's not what I'm doing. I'm just trying to share this with you because, again, I only own 100 shares, and I plan to buy more. And I've said this, you guys are watching me do this live every single day. So I'm building this position right in front of you guys. You know where my interest lies at with it, and you see some of the other stuff I'm holding with it. But I think it's going to be really cool for you guys to see. But please, this isn't here for pumping or anything like that. It's just really, I would love to have a discussion started on this. And this is just one of the stocks we're going to be monitoring in 2020. And I think it's going to be very important. So I hope you guys are ready. Drop your thumbs up on the video and let's get into the screen, baby. All right, so let's talk about some of the fundamentals. And if you guys don't have Thinkorswim, this is a very, very cool tool to look at. But I'm going to kind of interpret some of what it is and kind of point out the good and bad here with Snapchat. But let's even talk, because this is what I've always said with long-term picks. I don't care what anybody says. I know there's a lot of long-term haters. Yeah, again, and I encourage you all. The key is, will it last here in 10 years? That's all I'm looking for, and I truly believe Snapchat will be around. And why do I say that is because it has to do with that demographic that they're getting. And not only do they have the 18 to 24-year-olds, but most people investing right now, you guys are in the stock market, a lot of people don't know what Snapchat is. It's the same thing with Amazon. There was a lot of issues that people had in the past with Amazon. They said they were burning too much money. A lot of older people who were investing, and even in general, they don't use Amazon. They were really, if it's kind of crazy to think about, 5 years ago, 2015, people were still uncomfortable purchasing stuff online, at least some of the older generations. Even to this day, I know my mom barely buys stuff online. She's not a fan of it. But as things have changed and moved towards online, it has become very, very big. Even with Facebook now, one thing that Snapchat, this is one of their key things they're looking for, is the change in mobile advertising. So again, this is mobile advertising, but I remember when I invested, and this is something I was worried about back in the day, back when advertisements started coming around, when people were monetizing ads, mobile ads were crap. That wasn't really the best sort of advertisement because people didn't do what they did. Think as the iPhone has progressed and all mobile, people buy stuff on their phones now a lot more than they used to. You could do everything from your phone. But back in the day, 2012, 13, mobile ads were actually seen as lower quality. But now as mobile ads have grown, they've actually become a major, major source of revenue. Actually, for Facebook, a majority of their ads is from mobile advertising. So it has turned into a profitable segment, and that is what they have. So that is one I like. But the key, I think, here and why it's going to be here is that a lot of younger kids, like when in that map feature and the ability, it's kind of like Twitter. Like, I don't like Twitter as a company, but Twitter's going to probably be here because how the news could go. But Twitter now, and this is the same risk with Snapchat, is if the corporate structure is awful. I even said this with Tesla. Like, if you replace Tesla with a real big CEO, someone who's ran Pepsi or Coca-Cola, they would make that a very, very profitable company. So Twitter had a lot of issues with that, and they managed poorly, but it was very hard to monetize. But now when you see compare Twitter to Snapchat, that was Snapchat's initial issue. But in the last 2-3 years, they've switched it around, and that's what I'm going to show you here and some of the stuff I like about them. But the key I'm thinking here is that those 10-year-olds literally, and 13-year-olds and 14-year-olds, they all use Snapchat. It's a common source, and again, it's a great way to connect with real friends. They're going to be here, and they know this app, and they're going to be using it, and I think it's just always going to kind of be there. So that's what I'm kind of banking on, and I'm banking on that they kind of go like Facebook did from this cash burn segment to profitability, and that's what we're looking for, and that's what we're looking for in 2020 and 2021. But check it out here. They'll tell you about the company, but this is what I want to highlight. Here's their earnings per share. They're still negative, and you see 2015, they were losing 32 cents a share. Then they lost more in 2016, then even more in 2017. But now 2018, so this was them spending, and losing. But 2018 on the year, it showed they took a lot of that investment and became somewhat profitable. Although they're taking a loss, they went from losing $3 a share to only losing $1 a share. That's a big change. If you think about it, that's a bigger change. They could have been profitable if they wanted to, but now the question is, and this is a problem with a lot of these companies, any company, even Uber, is the only way they can make money is by spending more money. That's what we want to look at. And now this is the number one thing I like, because that's the question of scalability, is can you make money without spending more money? Do you have scale? Can you do the same thing and make more profits without spending more? And what is that going to be? That is going to be your margin. So take a look. Here are the numbers we want right here. Here's your gross profit margin and then operating profit margin. So one is how much money you're making, just gross profit margin based on how much it's costing per user to run the platform and everything. What is the total profit they're making? And then operating profit margin is factoring in now after you pay all the expenses, employees, everything of that nature. So here's the gross profit margin. It was awful in 2015. then it went to negative 11%, and then now they went profitable on the margin at 7.4, but then they almost 4 or 5 times that by 2018. And now comparing this gross profit margin to Facebook's around 70 or 80%, believe it or not. So if they could get somewhere around there, that is going to be good. And Facebook monetizes things a little differently. Now, that's what I like about Snapchat. They have TV shows and they have shows on there. And again, they offer a big platform for a lot of people to even be profitable off their own audience. But now, even with the operating margin, you see the operating margins are growing. And that's the key that I'm pretty much relying on, is that as long as these profit margins are growing, everything else is kind of growing except for the EPS. Their book value, it did grow and now it's came down, but still higher than what it was. That we're not going to pay too much attention on that, because the assets they have aren't as important in a way. And again, obviously they're spending their cash. It'd be nice if they had cash, but if they have a high margin and are growing their users, that's the next thing. They have almost 1 billion active users. So if they could keep growing at that pace, they're going to be better than Twitter and all that. And it's just the realness. It's hard to really have bots and stuff like that on Snapchat when you have a lot more bots on platforms like Twitter and Facebook. And I think that's a big point a lot of people are missing. It is hard to fake daily active users on Snapchat comparatively to Facebook. Even Twitter as well, too. It's just hard to be fake on Snapchat when it's all user-to-user interaction. It's all based on the realness of what's going on, and people will not add you and follow you on Snapchat if you're not a real person. There's just no real benefit. You can't fake likes. You can't fake views. There's zero benefit to fake accounts on Snapchat, which I like. So, again, you keep that up, and now take a look. Their sales per share is going up. All of these metrics, these are something I take a look at, but their debt has dramatically increased. That is going to be a cause of concern. But compare their long-term debt to when they started to now, it's about the same, but they increased their margins their operating margins by 600, 500% pretty much, and they went from negative gross margin to positive. And now, too, the earnings per share is still negative, but you could see even they're taking the same amount of long-term debt, but they're doing things right and they're learning how to. So that's what I like, and those are the metrics I'm going to be watching in 2020. And what we need to see is now, do they become profitable this year? If they do that, again, you're going to see 2019, so I think that will paint a different picture, and that's what people have liked from their last earnings, because this is all yearly. So once we see their 10K, we'll get more information. So I'm actually operating off data that's a little bit behind here. So you guys will see what I'm talking about too. But here's the thing I would say to look at is all the highlights. So they go over a lot of stuff here and they say what's changed. This is a great page here again on the Thinkorswim. And they go over the upside and downside. You know, they say stronger average revenue per user growth, which is, again, that's great. They're making about $20 or $25 a user. And, you know, they pretty much, they said the company has the ability to draw up over 50. By 2024, they're expecting $30 per user. So think about it. If that's how their operating margins are in the ads, and they keep growing users and the younger generation and even the older generations that were younger stick with it, and they're making $50 a user, that could be very, very profitable. So that's going to change a lot of it. But that's what I like. And I would go through there. You know, they'll say some of the key trends and what people are looking at and what they don't like. You know, I don't want to waste more time going on this, but take a look at this. I will give an update on this. You let me know if you guys want to, but now let's talk about how I'm going to buy it. So I have it in this small account. You know, I have it here. We have 9 shares. This is the small account that I do $200 a month in. This account's only $1,000, but now I have a bigger account that I'm looking to, I call it my mom's long-term, because I'm trying to put it in stuff that's both safe. So again, this isn't as safe. I'm going to mix this in. I'm doing $2,000 a month into this account, but I'm going to be buying a lot of shares of Snapchat. And what I plan to do is sell covered calls and sell cash secured puts. So you see I have 105 shares. We bought 100, but I got 5 free shares for free. So what I will be doing is, first, when I have cash, if the stock is coming down, or if I'm setting up and I want to buy it and the stock is too high, what I've been doing, and I did this the first time, I'll sell a put, which pretty much was saying that I agree to buy the stock at a certain price by selling a put. So it ties up that amount of capital, but let's say Snapchat's at $16. What I did earlier, I sold a put at $13. That's the play I did before this. I was trying to get on TD. I was trying to see if I could go back there and show you, but we sold that put, and I said I'd agree to buy Snapchat at $13, and Snapchat actually went up to $16, but I collected like $30-something in credit. So what I did, I sold the put, and I have another video on this, and then I went and bought 3 shares. So I collected the premium, which said I was agreeing to buy $100 shares of Snapchat at a lower price. I bought it there, then I took the premium and I bought 3 contracts. And now Snapchat shot up, and then the contract was expiring. I covered that contract, And then I said, well, I'm just going to buy 100 shares. So I bought 100 shares at around 16.10, but my trade price is lower because of the other shares. And then I sold another call now. So instead of selling a put, I sold a call, which means I agreed to sell my shares of Snapchat, 100 shares, at this price. So I agreed by February that if someone paid me $37, I agreed to sell them 100 shares of Snapchat at $20. So that's not too bad, because now if Snapchat goes up, I'll sell it at $20 if they assign me, and I would still make a profit. But now I got $37. So then I took that $37 and I bought 2 more shares. So even though I've only spent the cash to buy 100 shares, by selling the premium, covered calls, and covered put, I was able to get 5 shares for free. And this is what I'm going to pretty much do. I'm hoping that out of the $2,000 a month I deposit, I'm going to be looking to buy either 50% or more into Snapchat, and then use some of the capital to either sell puts or to sell covered calls, depending on where we're at with the stock and, whether it's up or down to make sense. But that's the whole goal, since I believe in this long term and what I'm going to be planning to do. I'm not really focused on the price, and I'm going to use the premium and buying through different quarters to lower this average trade price and accumulate shares and build a position. But now, if you want to start buying more shares, utilizing covered calls and selling covered calls and selling puts, if you have the cash and you're like, I want to buy Snapchat, but I don't want to buy it at 16, 17, 20, you sell the puts at a lower price and you agree to buy it lower, and then you could take the premium and reinvest into the shares. But that's pretty much what I'm going to be doing, and that's what we're going to do. So hopefully we see what happens in 2020. That is a quick little breakdown of the covered calls. I encourage you guys, come watch us live, and you'll see us do this and come ask questions. And yeah, that's pretty much it. So I'll see you guys tomorrow, and I'll see you on the live stream. And